Good morning. It's Jeffrey Christian. It's about 9:45 here in New York on Tuesday, the 11th of July. I've been away for a week, and during that time, some interesting things have developed. I'm going to waste a lot of time in today's video because I have to. I'm going to talk about Russia's pipe dream about a gold-backed BRICS currency. It's one of those things that's a giant distraction. And if the gold market were better informed and were populated by fewer promoters and more people who actually studied history and economics and finance, we wouldn't be talking about this. We'd be talking about the outlook for gold and silver. I will go over our views on gold and silver and platinum group metals briefly at the end of this video. But for now, I'm going to talk about what Russia's ambassador to Kenya said and the reality of the unlikelihood that the BRICS are going to announce a gold-backed currency in August. Basically, what happened was that Russia's ambassador to Kenya, or somebody in the Russian embassy in Kenya, said about a week ago that the BRICS are going to have a meeting in August, which they are. That's Brazil, Russia, India, China, and South Africa, and that they would announce a gold-backed currency. They wouldn't announce a union of their currencies because the other four do not want to have their currencies tied to Russia's ruble, but it would be a gold-backed currency that would be used for international settlements of trade and capital flows. This is something that Putin has talked about in the past, and I think to really fully understand this, you have to understand certain aspects about Vladimir Putin and his governance and things that are not necessarily known or accepted in the West, either by the fringe or by mainstream people. I've said before, and I'll say it again, Putin doesn't want to rebuild the Soviet Union. He wants to rebuild Tsarist Russia. That's why he has a Tsarist flag behind him and not a Soviet flag behind him whenever you see him speaking. And Tsarist Russia existed at a time when gold was the main form of currency for transactions and for international settlements. Putin has been in the doghouse ever since he was president. So about 23 years now, the U.S. government has seen him as being problematic and has worked against his interests, but he's also worked against his own best interests, unless you consider being a criminal worth several $1 billion that's constantly paranoid about everything to be a success. I guess some people would do that, feel that way, including some gold stock promoters. If you go back earlier this year when Xi Jinping came to Moscow for 3 days, Putin and the Chinese government touted this as a sign of their best friends forever and their solidarity, etc. And the West touted it and saw it as such too. But there were indications of the extent to which that was not true. Putin had prepared various documents to be signed in glorious fashion, press conferences where he and Xi Jinping would sign these agreements while they were there. And I don't think they signed any of them. There was one about a currency union, which Xi Jinping said, no, we're not going to do that. There was one in which China would agree to finance gas pipelines from Russian eastern Siberia and then buy the gas from Russia once the pipelines were built with Chinese money. And Xi Jinping said, well, you see, you claim that Ukraine is historically part of Russia, and we claim that those parts of Russian Siberia actually are historically parts of China. And in fact, they were controlled by the Chinese governments of the time until Tsarist Russia staged a war, attacked us, and confiscated that land. So in essence, you want us to pay for a pipeline so that we can buy natural gas from your government that we're pumping out of land that really belongs to China. No, we're not going to do that. So Putin has this nasty habit of saying, well, I'm going to say that this is going to happen, and then maybe everybody will say, okay, it's going to happen. And then it doesn't happen. And it's happened over and over again. He has been talking about a gold-backed currency in very weird ways for many years, and nothing's ever happened. And it's not just him. In 1998, after the Asian currency crisis, then Prime Minister of Malaysia, Mahathir Mohamad, I'm not sure if it might have been Singapore, actually, said that there would be a gold-backed currency to protect East Asian countries from currency volatility. It never happened. But the gold bugs and the gold promoters all believed, oh, good, we're going back to a gold standard, and Southeast Asia is going to lead the way. Now it's the same thing. We're going back to a gold standard, and these guys are going to see the way. The problem is that if you actually had an agreement, people would be talking about it. But insofar as the governments of India, China, Brazil, and South Africa, most of them have not said anything in public about this. Most of them in private say, no, we have absolutely no interest. The Indian external minister a couple days ago said, no, we have no interest in doing something like that. At the August meeting, there will be an agreement that we will talk about ways to do these kinds of things, but we actually have no interest. So there's no actual agreement to do this. In addition to which, if you think about it, none of these countries would benefit from it. A gold-backed currency is only legitimate if it's gold convertible. And the idea that you would use trade settlements, India's buying oil and gas from Russia, has been for years. It's increased its role in doing that because other countries have pulled back from buying oil and gas. India's been paying for that with various currencies. Russia asked a few months ago to be paid in rupee, Indian rupee, but the reality was there weren't enough Indian rupee around to pay for the oil and gas. So it goes through this convoluted thing where they pay in euros and dollars to a Russian bank, which then buys rubles from the Russian central bank, helping to prop up the ruble exchange rate. And then the Russian bank will pay for the oil and gas with those rubles. So, yeah, it's a house of cards. There weren't enough rupees. Russia said, that's fine. We'll come up with some sort of gold-backed thing. And that would mean that India, which sold down a bunch of its gold reserves years ago, and in the last 10 years has been rebuilding its reserves. It now has, I don't know, about 24 million ounces of gold in its reserves. That would mean that India would be at risk that it would lose the gold reserves that it has been rebuilding over the last several years by virtue of buying oil and gas from Russia and having Russia say, give us, here are our gold-backed currencies, give us your gold. India doesn't want to give up its gold. China doesn't want to give up its gold. Brazil and South Africa don't have a lot of gold in their reserves, but they definitely don't want to give it up. Each of them have about 4 or 5 million ounces of gold reserves. And if a gold-backed currency existed, they would be at risk of losing what little they have. You can see from this chart, which is actually from our 2023 Gold Yearbook, which you can buy on our website, and then you can read about all this stuff. You can see here, Brazil and South Africa both are around 4 or 5 million ounces of gold reserves. In Brazil, that represents about 3% of its monetary assets. In South Africa, it represents about 11 or 12% of its monetary reserves. So gold's not very important to them. They don't hold a lot of gold. And such a currency like this would only be negative for them and put them at risk of losing what little gold they have. So they have no interest in doing this. But the Russian government says, well, if we say it in public, maybe it'll happen. That's wishful thinking. It's perverse. And the worst part of it is there are gold promoters and gold bugs and true believers who keep wasting everybody's time by focusing on this kind of stuff. Let's talk about the markets. Gold and silver are doing pretty much exactly what CPM Group hoped they would do. If you look at this chart, you can see gold is down from a record high in the middle of the first half of this year. Gold is still, on a quarterly and average basis, at or close to its record highs. It's still very high, but it has come off on a shorter term basis. CPM Group expects it to experience perhaps further downside over the next 2 months, July and August, possibly into September. Last year, the weakness extended into the first week or the second week of November. We don't think that gold prices will be as weak this year as they were last year. But you can see that really, gold prices started rising after a consolidation period in the middle of 2019. They rose very sharply in 2019, 2020 during the pandemic. And then they came back off, but they didn't come back off to where they were, $1,250 to $1,350. They came off to around $1,700 in 2021. Came back up when Russia invaded Ukraine in early 22, came back down to 1624 last November, came back up to over 2,000, and they're back down around 1,900. Right today, they're at 1,937 as I speak. They got down to about 1,918 yesterday. Our expectation is that prices could be weaker over the next couple of months and then start rising again toward the fourth quarter of 2023 into 2024-25. And we do expect sharply higher prices in 2024 and 2025. The reason why we see the weakness over the next couple of months is relative strength of the economy, strong jobs report. Inflation's a little bit higher than we've seen. Housing market is showing some signs of stabilization. The auto industry is suffering from a variety of other factors. Big tech is having problems, but small tech is doing very well. And other parts of the economy are doing very well too. That's why you have strong employment and you have relatively low, historically low unemployment. That's going to continue. That'll probably lead to an increase in interest rates by the Federal Reserve Board in 27 of July, when it's going to be 26, 27 of July. And that kind of environment, stronger economy, stronger stock market, still high inflation, a little bit more increase in interest rates, that could cause gold and silver prices to weaken somewhat over the next few months. We don't see them going back to 1624. We wouldn't be surprised to see 1850. We wouldn't be surprised to see somewhat lower prices in the next couple of months. The same economic factors we expect to start weakening over the fourth quarter of 2023 into 2024. And that is expected in our mind to lead to, again, one of those increases that you saw, in the second half of July, August of 2019, July, August of 2020, January, February, and March of 2022, and again in the second quarter of this month from of this year, March into April, and then came back down. We expect to see interest rates are continuing to rise, but they're close to the end of the increase cycle. They are having some modest effect on reducing inflation, but inflation is persisting because of secular factors and because of other factors that are not necessarily constrained by rising interest rates. Even though interest rates are rising, at 5.5% with 5.5% inflation, 6% inflation, you don't have real interest rates so high as investors will say, why do I need to own and invest in gold or silver or stocks or corporate bonds? I can earn a 0% return on a real inflation-adjusted basis by buying T-bills. It's not there yet, and it may be a long, long time before you see real interest rates high enough that sentient investors say, oh, okay, I can lock in good returns by investing in treasuries. So our expectation is what it has been for a long period of time. A little bit of weakness over the next couple of months. Selling may go away and then come back in September, October, maybe November. Very similar outlook for silver. Silver, gold's been holding up pretty well above 1880, 1900 over the last several weeks. Silver's been holding up pretty much above $22. It's around 23 and a quarter right now as I speak, and we do see the potential for some weakness. You're seeing rising inventories on the COMEX registered stocks. That's to be expected during the summer months. And you saw a slight increase in London stocks too. And again, I have to point out the decline that we saw in London silver stocks was not silver disappearing. It was silver being bought by Indian bullion banks and trading companies, which then took it into India and trans-sold a lot of it into other South Asian countries, and did a very good job doing that. Platinum and palladium, they will suffer from some seasonal weakness in auto demand as well as some secular weakness in auto demand, but the prices have already come off. We do think that palladium prices are vulnerable to the downside, and we think that platinum prices, which are about $930, we wouldn't be surprised to see them weaken over the next couple weeks or couple months, but then we do think that platinum prices will do better when the auto industry starts looking better. If we do move into a recession in 2024, 2025, coupled with secular shifts, a shift away from petroleum-powered vehicles to electric vehicles, and a shift away from buying cars, then those secular trends in the auto industry and auto market could combine with the recessionary conditions to keep platinum prices weaker longer than we otherwise would think. That's all I have for now. On the 25th of July, CPM Group will launch and release its 2023 Platinum Group Metals Yearbook. There will be a free online briefing. You can go to info, you can send a note to info@cpmgroup.com, or you can go online, I believe, to our website, cpmgroup.com, and register to plug into that briefing and pre-order the book if you want. The book comes out as an ebook. 10 o'clock Eastern Time on the 25th, we will have a briefing that will last 1 or 2 hours going through platinum, palladium, and rhodium prices. And then later in that week, on the 27th, I believe, of July, the last day, Rick Rule is having a symposium on natural resource investing. And he's asked me to take up the end. So on the last afternoon, I'm speaking about the world is not ending. But the good news is you can still make money investing in gold and silver. It's going to be interesting because, he's going to have 24th, 25th, 26th. He's going to have 3 days of people waving their arms, telling you that the Fed doesn't know what it's doing, that the Fed is going to fail, that we're going to have hyperinflation instead of lower inflation, that we're going to go into a Great Depression, that there's going to be a currency recall, all kinds of nonsense. The world is ending. Buy gold and silver now. And then I get to stand up and in 20 minutes say, if you were listening to these guys over the last 3 days, just give me your wallets. Save yourself the pain of losing your money slowly, and get on with your life. So, good conference at Rick Rule, at least the last day. Hope to see you there. Hope to see you at the Platinum Group Metals Yearbook launch. And I hope to see you buying the book and studying it, because there will be a test. You can go to our website and read other stuff. And we'll talk to you toward the end of this week. Take care. Take care of yourself. Try to do something good for the world. The world needs help.